Good afternoon, everybody, and welcome to today's edition of Live Market Analysis USA edition. My name is Carl Capolingua. I'm the market analyst over here at ThinkMarkets, and it's a pleasure to be with you as we head over to the US and have a look at really all of the stocks we can find today that are going to be the best, the absolute best we can add to our portfolio, no doubt. I don't want to overpromise and underdeliver, but I tell you what, we're going to find the best today. The format for today is very simple. It's over to you. Find the Q&A window, and I'll give you my best technical and fundamental analysis reader. So it does, I guess, put into perspective whether we're going to find the best or not, because that is up to you then, isn't it? But let us start not with Agilent, but with a couple coming in through here. First one from Nicola, PINS. And if we have time today, I might do the scan as well. Pinterest. Okay, well, hey, popular app, isn't it? Pinterest, I've got it on my phone there with all those wonderful pictures and images you can put together. I'm sure you all know what they do. But let's have a look at the chart. It's not the worst chart, really. We can see that we have kind of a bit of a short-term uptrend, a bit of a long-term uptrend, although it's still very flat. How do you know it's flat? Well, this long-term uptrend is determined by my 144 and 233 exponential moving averages. Visually, I like to have it on my screen all the time because it helps me at a glance understand whether we're in a bull market for a stock, whether we're in a neutral market for a stock, or whether we're in a bear market. I'll just zoom back here and you can see, look, you want it to be dark green. You want it to be rising. You want it to be getting fatter. You know, which effectively talk about two moving averages moving apart, and that's only happening if the acceleration in the underlying price, or if the underlying price is accelerating upwards, and that's going to give you that wider trend ribbon. Now, when the trend ribbon starts to contract, that's where we're going to say, well, the momentum to the upside is diminishing, and therefore the ribbon is very, very clever. It turns itself orange. How about that? You can see at that point it starts to contract. It says, I'm not so sure about this long-term uptrend. I'm going to go orange, and through the traffic light system, pretty simple, I'm going to tell Carl, something's not right here. Go have a look at some of the other factors. The short-term trend will do the same thing, but it'll flip around a bit quicker because it's based on the 21 and 34 EMAs. And then you can see there very decisively when the trends change, or when the moving averages cross over, that's when the color changes to the bear case. And we got a few periods here where we've gone back to orange, maybe heading back up. The other thing I like to do with my long-term and short-term trends is to look for what I call dynamic support resistance. We've all heard of support resistance. You know, obviously, if something bounces around a particular point for a while, that's support, like down here, around through here, we'd say that was support, and then up around here, we'd say that is resistance. But, you know, and I call these static levels. They're not unimportant. They're super, super, super important in my analysis. They're my points of demand and points of supply. We'll talk about those later. But I do believe in the market, there's also this dynamic support resistance. Static doesn't move. Dynamic does move. I think dynamic's just as important. And we can see that if you pick the right trend ribbons, hey, I'm not saying I've picked the best ones. These are just the ones I like to use. And you go pick better ones. And if you pick better ones, tell me about it. And I will literally change mine to yours, because all I'm interested in is finding the best ones. But anyway, over so many different stocks, so many different commodities, foreign exchange, crypto, over so many years, I find these are the ones that work the best for me. And hey, you know, that might mean something. I've been investing now for close to 30 years. And these are the ones I found that work the best. But again, don't let me dissuade you from doing your own research. What we find is on the way up, we see that the moving averages, they support price, dynamic support that is moving, sometimes more valuable than static. And you can see here, look how the long-term trend pushed up. And I'm not just cherry picking because Nicola picked this one, I didn't pick this one, but you will know if you've suffered through my analysis long enough, you know already that I'm telling the truth, that these moving averages are indeed incredible at delineating often uptrends from downtrends and vice versa. So we want to see the trends go from, when we're looking to go back to an uptrend, go from resisting price, dynamic resistance, to dynamically supporting price. And that was a long story to get to the short bit, which is, I think that's what's happening now. I think we're seeing these support Okay, so we've got a big tick on the big picture stuff. Now let's drill down. Those moving averages, great visual tools. Very quickly, as I scan through a list, I can just check those. Yeah, something I need to do some more analysis on, or no, don't need to do any more analysis on that. The next stage, I go to my price action. So we're drilling down from big picture into, I would say, not the short term, but more the medium term. And I've taught you how to do these, higher highs, higher lows. That's a short-term uptrend, lower highs, lower lows. That's a short-term downtrend. And we link them up and we start to be able to draw in our troughs. And I might have drawn one wrong there, but forgive me for that. I'm always rushing in these sessions. But we want to see high peaks and high troughs. So this is the price action we want to see. And the only way you can get this is if you've got rising points of demand. How do you know that's a point of demand, a pod? Well, the price bounce from there. The only way the price can bounce from any level ever from the beginning of stocks or whatever people were trading, I don't know, grains and rice, I think, for, shiny bits of metal. Excess demand causes price to go up, and that's why we call that a point of demand. And actually before that, we had a little period of excess supply, didn't we? That's why prices go down, and nobody can argue with me. I challenge you to argue with me on this, and you cannot, because these are the most basic tenets of economics. That when you have excess demand, price goes up. And in between these little periods of excess supply and excess demand, in between one of those, you're going to get a pod, and in between the XDs and the excesses, you must get a POS, a point of supply, where the supply demand balance changed. You transitioned from excess demand to excess supply. Now, we want to see rising points of demand. Why? Because demand is building. That's a good sign, not just on a day-to-day basis, but more on a week-to-week basis. That's kind of where we're going with this price action. And we see that supply, points of supply rising, which means supply is diminishing. That is good stuff. That's the price action I like to see. I say that's good price action. What I don't like to see is Hey, what I've drawn there actually isn't terrible, assuming one thing. I'll talk about that in a second. But as a run of the mill, look at this. They both started at the same place, didn't they? They both started here. Look, they both started here, and they both finished here. So ordinarily you go, well, they must be the same. I don't believe they're the same. Okay, so I definitely like this one, like this stuff. Like it. I don't hate it, but I like it less, perhaps. Okay, because this is more indecision. That's terrible grammar. More indecision, less decisive. The market isn't sure. We're really excited. We're really disappointed. The periods of excess supply and demand are very similar. Here was the periods of excess supply were very shallow and very brief. The periods of excess demand were bigger and longer. They took longer. So where I like it is the market can really decide. Everybody thinks it's great. Here, oh, it's good, but no, it's not. Oh, it's good. Anyway, what do we have? I think we've got a bit more of the like it less scenario, don't we? That's where I'm going with this. Now, I said I don't mind the like it less under one condition, and that is we are bumping into a big point of supply, because you naturally expect into a big point of supply, you're probably going to see some indecision. That makes sense. It was an area where the market was very decisive in the past. It sold off, but now we have to deal with the supply at that level. I'm talking about this big point of supply here. We need to deal with it. And it takes some time to deal with these points of supply, because when you start, they might be that big. Okay, but then you test into it. Here's a little test, a test, not a test. I assure you, it's not a test, it's a test. And we would call that actually our first test of that point of supply. And then we've got a little second test here, but we're testing. And each time we hit that point of supply, we take a little bit of supply away. There we go. There's a little bit gone. There's a little bit gone. There's a little bit gone, until we've got rid of it. And then without that supply in the market, we're able to move higher to the next level and the next level and the next level. Where's the next level? Hey, I don't know. It's miles away. I'm going to move on from Pinterest because I'm not excited about this one. I think the trends need to be steeper. I think they need to be expanding a bit more. I think the price action could be clearer. And the final thing I didn't talk about was my candles. I want to see predominance of white candles. I'm going to go 60-40 here, white to black, but the black ones are a bit nasty from that point of supply. Look, I think we're in there, we're working in there. I'm a hold on this one. I'm a happy holder. If I had to give it a score out of 10, 5.5. 6 out of 10, but I reckon, Nicola, we're going to find some 7s, 8s, 9s, and maybe even some 10 out of 10s later today. What could make me fall in love with this one and love it more than any other stock on the market? I don't think that's going to happen, actually, just looking at it. I just don't think this chart is kind of that way, and it would need to do some really clean price action, I would say, through there. And in the light green zones, it would need to print some wonderful, wonderful candles. And by light green zones, I mean that light green zone there, and maybe even on the breakout here. And we know what I'm going to do next if you've been, again, as I say, suffering through my analysis for many weeks. I'm sure you have, or months for some poor souls. It's that candle. That's an important candle. It's going to change its body. I wish I could change my body sometimes. There we go. There, change its body from black to white. And here we go. That's its best friend, okay? And the longer, the better. If I saw those candles in there with some nice price action, okay, I could get more excited about it. It'll go to, say, 7.5, 8 out of 10. But hey, I think, as I said at the start of this, we're going to find the best of the best today. Maybe Pinterest isn't it. But what I can do, hey, maybe it can get better for us. Let us head over here to our Thomson Reuters Refinitiv Icon spreadsheet, and I will click. You can see that. You can. Some of the things I do here you can't see because of the OBS Studio software working away behind the scenes, doing wonderful things, and not showing some windows but showing others. So it's the United States dollar I need to set on there, and we will close that up. We'll hide that from you again, and we will go here and we will go PINS or caps and .N for NYSE, and Thomson Reuters Refinitiv Icon is going to go away and it's going to look up in the database all the brokers it's taken surveys from for the key data: revenue, gross income, EBITDA, EBIT, pre-tax profit, net income, EPS reported, I don't even know why I put that in there, DPS, free cash flow, and all these other weird and wonderful ratios in there. And it collates them and says, okay, well, what's the average revenue expectation from 28 big brokers and research houses? And they reckon, about $3 billion by the end of this calendar year, 2023. And then you go forward, and you can also go backwards as well. So you can see, well, what's in the bag? And I like to see what brokers are doing because it very much suits my style of analysis, which is consensus rules for me. Okay, so I want to see what the market's doing, and then I like to do what the market's doing. So the market thinks, and if you believe these brokers make the market, then you believe that this is the market view, that there's about 7.7% upside to their average target of 29.66, but there's a high target of 39 and a low target of 22. Brokers will not only give you a price target, they'll give you a rating. So 3 strong buys out there for Pinterest, 10 buys, it's not bad, but quite a few sitting in the middle. They're not sure about it at 20, and then that's a hold, and then one sell. Now, next place I like to go, there's lots of really wonderful information on this spreadsheet, but I tend to just use bits of it. I tend to go to this line here, which is our earnings per share line. Ultimately, that is what's coming back to shareholders after management's taken all their bonuses, after they've paid for all the inputs to produce the widgets that they then sell, and you get where I'm going. I want to see bottom left, top right. I want to see strong, consistent growth through things like pandemics, supply chain shortages, rampant inflation and rising interest rates. Not quite the case here because we go 42, 113, we go 0, actually 0.42, that's good. 113, great. And then 62, not so great. 79's not bad, but not exactly shooting the lights out. But then we go 106, 138, and then 96 at the end is not all that good. And what this column here does when I go there next, it tells me the compound annual growth rate over the next, the forward-looking period, depending on, it could be 1 or 2 years, and it automatically adjusts for that. But it says 7% here. Now, that's a little bit lower than the market's average. Market, usually about 8. I say 7, 8, 9. It'll depend on the year, and good and worse years are outside of that. But let's call it 8 as an average for, say, the S&P 500. And the S&P 500 average PEs, it's in the mid-teens, give or take. So we've got a little bit below average growth, and we'd like to therefore pay a little bit less than the market PE. So maybe a 13 or a 14. We're not doing that. We're paying 27.3, and I do think that's a bit of an issue. Now, sometimes the big broking houses, they will pay a bit more for stocks if there is a quality element to that stock. They're saying, look, we don't mind paying more than the market's average price for average earnings because the earnings are higher quality. If you look across the market, there's going to be some high quality earnings and some low quality earnings. Okay, but this is our confidence. This is our risk adjustment, right? So we don't mind paying 27.5 for 7% if it's the most amazing company ever. And I don't think that's what we're seeing here. And look, to give you an idea, you'll get a bit of an idea from your historicals. And we can see here with 24.36, that's actually below 27. So we can't even say this is below the 5-year range. I like to see it below the 5-year range. It's not the case. And the spreadsheet is doing some pretty clever stuff behind the scenes and saying, well, I think Pinterest is a bit overvalued here. I think the brokers have got it wrong. All I'm doing here is I'm not trying to find an exact number. I mean, my valuation is closer to $24, but that's kind of irrelevant. I'm trying to find red flags. Is there something here that spreadsheet saying, I'm not so sure about Pinterest. Maybe, look, if the chart doesn't look so great, if the chart's only a 6, why would you buy it, sort of thing. But I think that's where we're at. I think we've got some technicals and some fundamentals coming together here on Pinterest. Okay. Now, people do get frustrated with me because I spend too much time on the first one, I know, and then we didn't even want to buy it. But let's keep moving. It does set us up. So now you won't believe how quickly we're going to move through the rest of these, I can assure you. Now, this is more like something I want to buy. Winmark. I have no idea what they do, but I'd happily go out. I don't really need to do much analysis here. And I would say tonight, I would literally go and throw some risk on this, and then I would see how it goes and then continue to add risk. And you might say, Carl, why don't you just put a full position on this? I say, well, look, this is just not what I like to do. I like to, even for the best looking chart, just have a little bit on it and see how we go. Because often something that has run a long way, it mean reverse, doesn't it? It reverts back to the mean. I'm not saying all the time, but it can happen. So 1/3 is, I'm happy with that. I don't need to do much more analysis because I've set you up on the previous one. Amazing trend here. Wonderful trend here. Are they spreading apart? Of course they are. Are we seeing dynamic support in the zone? Yes, we are. We're seeing how we've transitioned here, probably from some supply into some demand. The candles are predominantly white. The price action is exemplary because it really is this very long periods of excess demand, very shallow periods of excess supply. And this would be a 9.9 out of 10, I'm going to go 9.8. I'm going to take 0.1 of a point off because it didn't quite close at the high, and that's been really pedantic. And then I'm going to take another 0.1 off because it's a bit of a ways away from my light green zone, and I like to get them a bit closer to the zone. And if you're wondering what I like, this is this here, and this here. I mean, look. Take a picture of it, snapshot that, stick it on your wall, and when you see the light green and the expansion, and the light green and the expansion, and the dark green and the expansion, you see that little pullback into the green zone, and it actually popped in. It actually popped in four candles, didn't it? 4 white candles. Look at these babies here. There we go. Where are they? 1, 2, 3, 4, and the gap as well. Even better. It's compulsory. It's compulsory buying, ladies and gentlemen, right around here. So losing a 0.1, that's all, because it's a bit of a ways away from my light green zone. And it does explain also why, I will throw some risk on it. Yeah, it's a bit far away from the green zone. I'll throw some risk on it because if it does mean revert, I've only put a third on. I'm still confident in the long-term trend. I think we'll be fine. But if it then starts to throw in some other signals like this again, that's when I'll add the next third, and so on and so forth. Now, I'm super curious as to, and this one, did I mention it was from Perry? So Perry gets the credit for this one. Let us head back to here and type in, what a code as well. Actually, I'm going to add back 0.1 just for the code because I think this one is shaping up as a winner. Boom, boom. Hopefully, the old Thomson Reuters Refinitiv icon screen doesn't conk out on us. It likes to conk out on me during sessions. It's fine when we're not in session. Oh, I can't believe that. That is impossible. We don't have any broker coverage. Maybe it's broken. I don't know. That's so weird that a stock that looks that good isn't covered. MSFT. And again, don't shoot the messenger here. It's still working. It's just a bit slow. Hey, these aren't my numbers. These are Thomson Reuters numbers. So send your angry emails to them and say, hey, you need to get some brokers to cover WINA. Okay, let's keep moving. I have one from Twitter I need to get to. It was for an ETF, SSRM, I think it was. SSRM. So let's do that one before I forget. And that was for S space Stewart, I think it is. I think it might be Stewart. SSRM. Maybe I've got that wrong. let me double check. Sorry, bear with me 1 second. I should have been more organized. It's not far away. Don't worry. Where are you? This SSR, and I've got it right. SSR backed by Sprott. So when I heard Sprott, I thought it might have been like an ETF, but I don't think from the name, it looks just like a regular stock to me. And I hope I've got the right one for you. Okay, so let's do some technical analysis first. I'm going to zoom out a little bit. And I'm concerned. You can tell from that pause, can't you? When Carl pauses like that, he's trying to find the best in the chart so as not to upset the person who's asked for it. I can't get too excited about this one. There's some good stuff happening. That's usually what Carl says next. You know, let's look at that. That's good. This is not good, though. I don't like the fact that we've come out of here. Okay, we should have stayed above that. It was starting to look good. Don't get me wrong. Here, looking fine. But then we do have some pretty consistent black candles. Well, I shouldn't point at that white one. I should point at that one. So I'm not so sure about this one. It is possible that it is turning the corner. But I think there is quite a great deal more work to be done. I mean, it's good that we're holding that. That's very impressive. We are trying to interact with that long-term trend zone, but you can see it's failed. It failed there not long after. Even it's got a history of deception, really, hasn't it? I mean, it looked amazing there. I'd actually go to say that looks like a compulsory buy there, and I would have got completely tagged. And it does, you know, let me just go back to that and just make that point. You know, I think on this candle there, I think that looks amazing. I would happily, and it's a turnaround play, so we understand the risks of turnaround plays are greater, but I would happily add 1/3 on that trade every day of the week. And it does really, you know, justify, maybe that's the word I'm looking for, why I do have this way of thinking, and it is because that I like to get in a little bit at a time for this reason here, and it's going to become apparent in a second, is that we don't know often in these turnaround plays what is lurking beneath the surface. So I like to just dip the toe in the water. So if there is a nasty shark lurking just under that surface there, which is actually what happened, and then such a convincing and decisive turnaround. You all know what I don't want to see if I'm long is that candle and that candle a little bit lower, and then, you know, breaking through this zone here is terrible. And wowzers, at least we would have had some really good signals to get out, right? If you're following my methodology, we actually could have gotten out with very little damage done to us. So that would be one, I don't know, upside, I guess. Or so look, I can't get excited about it now. Keep moving. I think I won't look at the fundamentals for you, Stuart. I think we don't need to at this stage. What could change it? I always say that at the end, don't know. What could change it? You know, white candles and the right price action. So something like this, literally. And it gives you an idea of how long it might take for me to get excited about this one. So it is a pass, unfortunately, for me. Okay, you would have had a toe chopped off on that one a couple of weeks ago, wouldn't you? Let's get to the next one, which is also from Perry, LBPH. Sounds like one of those those rainbow acronyms, and I don't mean to be facetious at all, but LBPH, doesn't it? Now, better be careful what I say there. Okay, I think that is the most amazing run-up. Most amazing run-up over the last few weeks. I can't fault it, and I can't see really any signs of supply coming in there. But let me say, it would have completely caught me by surprise, and I would have given this a very low score just as the run started, because look at all the black candles. All I can see is black candles after black candles after black candles, and then the leopard literally just changed its spots. I think this is very good. I can't buy it now. And the only reason why I can't buy it now is it's just miles away, isn't it, from my light green zone. I just fear that as you get further and further away from that zone, the chances of a mean reversion increase. Now, if you wanted to, I could do this. I mean, it's a cheeky 1/3, and that's all it would be. But you understand what you're getting yourself into here. It may mean revert. And I think you're going to get a better place, if you're patient, to have a go at this one probably around here. which is the old substantial, major, I would say, major point of supply up here. But what we do tend to find, and I get really all back to front on my colours, don't I? We do tend to find that the points of supply from the past tend to act as points of demand in the future. Okay, so you may well get a little bit of a pullback to there, or you may not. That's the thing, and that's why I am advocating for the more risk-seeking people out there to just add a third here and then see how you go. Because the risk here is it keeps going because there's no sign of supply, is there? There really is no sign of supply. Good price action, it's vertical price action. Market convinced or uncertain? The market is absolutely convinced. There is a consensus here that you want to own this stock and you don't want to sell it. That's why it's going up. How do you get white candles? You've got a bunch of people that want to own the stock, and at the same time, you've got a bunch of people that don't want to sell it. How do you get amazing price action? Ditto. Yeah, not sure what more I can say on that one, apart from let's see what the brokers are saying about it. Head over here. I wonder if we're going to have coverage on LBPH. Let us see. For people wondering what's coming up next, we've got JBSS, IPAR, VCEL, AAON, and ARLO. And then looking at the streamers, who's joined me on the streamers here, we've got DH Horton and Snap-on coming also. And I must keep an eye on my chat window as well. So I know Nick's been sending me a few there. Okay, we do have six broker estimates, and we're not going to be able to do a valuation because we've got negative earnings, and my spreadsheet needs positive earnings to be able to give you a valuation, I think for obvious reasons. And what we can then is just do the broker consensus, and the broker consensus is for $17.50 is their target price. Not many brokers, so take that with a pinch of salt. A high target of 25, low of 11. So given the price is 7, every broker in the sample has a price target significantly higher than even the current price. And we've got 3 strong buys and 3 buys. So very positive there on the broker consensus. I can't say any more than that because there's no data there for me to be able to say any more than that. Let's head back to here and keep moving. Now, I know, I thought you sent me some there on Teams, Nick, and I don't have Teams open. Let's go. Yeah, found Snap-on, Amazon, Netflix, and Coin. Where to next? Okay, JBSS. All of those are coming up. Oh, amazing. Again, from Perry. Perry knows what I like. I have no more words. Plus 1/3. Again, not adding more than that at this stage on the basis that we are a ways away from that light green zone. But hopefully you also agree that if you've been following my methodology, you had entry after entry after entry after entry after entry on this one at much lower levels, okay? And the key actually on this chart, the most important candle on this entire chart, I would say is this one here. Look at the close on that one. And yes, I know it pulled back, but this is what you so often see. And I reckon that would have been their fourth quarter earnings update. And you often see that when you have a big surprise, positive surprise in earnings, you do see a little bit of a fluff around for a while, but then 3-6 months, and this is what the studies do show, the prices are higher. So I look at those not as an opportunity to get out or to short sell because it's gone up too much, but I look at those very much as a not a red flag. What's the opposite of red flag? I don't know. White flag, a green flag. I don't know. The flag that tells you need to keep an eye on this going forward. Plus 1/3 compulsory there. I don't need to repeat myself on why. See earlier parts of this presentation. Let me go back to here and show you what the brokers think about at JBSS. JBSS. Hopefully we get some coverage here. A little bit slow today on the Refinitiv icon. I don't have any coverage. What a shame. While I'm here, I'm going to type in the next one and see if we have it. And that way we won't need to come back to it. If we don't, we do. Okay, now, and yes, I will be able to give you evaluation. So into Parfums, I know what these guys do. These are one of the biggest global suppliers of the ingredients for your all sorts of things goes into. It's not just your perfumes, obviously, but your food additives and all sorts of stuff. So a big industrial company here. So I'm not surprised we've got some coverage. But are they based in the US? I don't know. Let us go. Based in France, it's my guess. Amazing. Probably not at a plus 1/3. So I'm not going to go plus 1/3 on this. And I think you know why. That shadow up there just disturbs me a little. But it's more one I would wait to buy on a pullback. And again, you can see. Yes, good. Thank you. Oh, God. Thanks, Nick. See that shadow? That's the shadow that is preventing me from going plus 1/3 on this. I think it's just a wait and watch and see, and just be patient for the next setup that comes along. Otherwise, you can see many opportunities to add risk. And I'd say the prettiest one of them all is this one here. That's a cracker. Just look at the candle after it, even better. That's the one you want to just print out and stick on your wall wherever you do your analysis. That candle there. Is amazing, and it's so good even, and it's through 100. You can see how 100 had an influence here. People just want to take profit at 100 for no other reason that it's 100. And I know there's a point of supply there, but the strength of the candle, it wouldn't even bother me. I would happily go 1/3 just on the basis of that. And then you would say, hey, you should have added more than 1/3. Well, actually, on that candle there, you could easily have added another 1/3. The very next candle was it's another great signal to buy. And then there would have been other reasons, I would say, in here. That group there is the next one. But we are navel gazing, aren't we? And there's no point in doing that. Let us head back to here and now do the analysis on Parfums. We have 4 brokers, not that many for a US stock. Price target's not that much higher than where it is actually, 160, 150, only 2.5% upside. High target there, 178. No strong buys, 3 buys, 1 hold, no sells, no strong sells. EPS line, not great. I reckon something to do with the pandemic there. We weren't buying as many Parfums. I can forgive that. I can definitely forgive that. And then moving back to some very solid growth, 16% growth, double the market average. Obviously, we're going to pay more for it at 33.9, but we need to see how that compares to the 5-year average. Is it one of those quality stocks where investors have just in general paid 40, 50 times earnings, and it appears to be that way. So 33.9, I think, is a very, very attractive PE for this particular stock, and therefore I would say it's actually undervalued. I reckon it's got some price target upgrades coming from a few brokers, so that will increase that price target. No red flags here for me. I mean, it looks like an absolute cracker on the valuation. Unfortunately, maybe requiring a little bit of patience there to get an appropriate entry on the chart. But Perry with 3 incredible picks there. Well done. Back to Nicola. VCEL. Pretty close again as well. A little bit like Pinterest, but I think better than Pinterest. I mean, if Pinterest was a 5.5 out of 10, I think we're warming here. I think we're probably about a 6, maybe a 6.5 out of 10. It's not that far away. You can see more white candles in the mix here. I think that's impressive. Price action is flat. I can see a reason why the price action is flat. I can see, actually a very important point of supply there. But even if we get through that, there's probably next level there. Look, just hovering under that point of supply, less enthusiastic. It's not bad at all. Could I add a 3rd on this? Look, given some of the other ones I've seen, I'm just going to go pass on that. This candle is very good. Don't get me wrong. I'm going to go past. I just don't think it's going to be the best one we're going to find. It's not the worst. If you have it, hold on to it. I can say that at least. I will definitely go here because I'm curious now to see if we get a really interesting evaluation on it. So VCEL it was. And let's check out what the brokers are saying. Not that many brokers also on this one. Price target considerably better though, isn't it? 37.75. 2 strong buys, 1 buy, 2 holds, no sells, no strong sells. EPS line, I can give you a valuation because we do eventually get some positive earnings. And with a 290% expected compound annual growth rate, you can see it's one of those that it has been loss-making. Funnily enough, made a profit in 2020. How about that? And then is looking to go into consistent growing profits. When we get crazy numbers like this, my spreadsheet says, I'm not so sure if I can really handle that, Carl. But with a PE of 40, that is a forward-looking PE of 40. We don't have a big sample size, do we here? And that's why it's picked 40. It's gone median of those 3. It's showing that. Look, not enough in here for me to disagree with the brokers, and therefore I must say it's looking a bit cheap here. I'll go that far. Okay, looking a bit cheap. So that might support your view, Nicola, if you get some nice white candles through here and some good price action of maybe adding that one to your portfolio. No cheeky second requests in this one, Nicola. You can ask as many as you like. It's not the ASX one. We'll have plenty of time today, I can assure you. I wish we had more people in the US one. I think these are so valuable. Tell your friends, if you've got people investing only in ASX stocks, tell them to register for this and sign up and check it out, or maybe even check out the recording, because I think, hey, we are going to be in a bull market at some stage in the US. That is inevitable. This bear market will not last forever. And I tell you what, when the US starts going, it will make Australia look like kindergarten stuff. Okay, there are so many more stocks. We're talking about 6-to-1 number of stocks and stuff that goes up like this. Okay, we might have, ASX 200. There might be 10 stocks looking like this in the ASX 200 in a good bull market. You're going to find hundreds of stocks looking like this. I could easily go 1/3. I know 100's there, but looking at the candles, I don't think 100's a big surprise here. So I'm happy 130. I know there's a little bit of a shadow up there. It's only tiny, and I just think it's very strong. But it's just coming out. I think these are about 100. I think these are about proximity to 100. So I think we've dealt with 100 and happy to go plus 1/3. I'm not going to go more than that. It's a little bit of a ways away from the light green zone, but otherwise no problems there at all. Looks very, very strong indeed. AAON. Let us head over to here and see if we can make that case on the valuation side of things. And we have, I'm surprised, only 3 brokers. Okay. Not a great deal of data. In fact, we're only going out to 2024. So the spreadsheet might not give us, not accurate, reliable data, I guess, given this so little of it. Looking forward. What do we say? 1 strong buy, 1 buy, 2 holds. EPS line is okay. Again, you can forgive one of these 3 because it looks like it's bouncing back very strongly. 20% compound annual growth rate, but there's not a lot of forward-looking periods there. 34.8. Can we pay 34.8 for 20%? It's not unreasonable. No, I think that's actually quite reasonable for that amount of growth. And the PE has been so much higher anyway. So I'm going to say that this one actually still looks very, very cheap based upon my spreadsheet, but stick a pin in that because there's not a lot of data. And the brokers are, to be fair, quite a long ways away from what my spreadsheet is saying. But my spreadsheet's going to 20% is going to give it a pretty big tick, and then it's going to say, well, it's a long ways beneath what the market has paid for it in the past. So why wouldn't the market continue to pay a premium for it in the future? That's what the spreadsheet's thinking. It's not quite chat GPT, my spreadsheet, but it is a little bit clever. Arlo. We've been watching this one, haven't we? I don't know where my markings have gone, but we've had a plus 130. In fact, if I go over here into this one, we'll probably have. There you go. That's my markings. I'm now regretting I put my markings in the other one because they're going to be stuck somewhere else now. This is typically my weekly chart. So that's annoying. We may have had some scratchings on those previous ones today. But anyway, look, let's go in this one. We've gone plus 1/3 to two adds here, because it's the turnaround play. A little bit more risky, obviously, than bottom left, top right. I think it's fine. No reason to fret about this one. In fact, I think it's holding up pretty well. Market's a bit crappy. I was looking for a less potentially offensive word. But I'm sure we're not offended by that word. A little bit crappy over the last couple of weeks of the market, and this is holding up pretty well given the run it's had. So happy holder here. Do I need to add some risk to it? Look, those little 2 white candles are good, but not good enough to draw me into another third. I reckon, given we've got 2/3 on this one, just wait and see for a close above that level there. And that high is 662. So 663 close or better, and then adding some risk, unless you see the most amazing white candle before that, or lower shadow, maybe even into the light green zone, then you can go. But that's the way we're thinking here. We're not thinking about getting out necessarily at this stage. I'm sure we've done Arlo in the fundamentals, so I'll refer you to previous recordings and we'll keep moving. AMPX, AMPG, okay, good. That's a good start. Let's press that one and go AMPX. And that's not it. That's it. I think it looks okay. There's not a lot of data there. It's very interesting. We don't have a long-term trend because it hasn't been around for the 133 periods we need to get that. Not to say we can't buy it. If everything else checks out, I'm happy with it. Does everything check out? Look, I think it's good. It's not great. It's not one for me. And I totally concede that there's some good stuff going on, and it could be quite explosive because, you know, this has gone from 4 to 9. I mean, it's gone up 120% in a very short space of time. But I'm just looking at that. In fact, there's a little bit there, and you can see it flattening into those ranges. Maybe it's done its dash for the time being. So I'm going to say, look, I need a bit more information here. Give me another 10 or 20 candles. I might be able to give you a better idea about it. But happy holder, don't get me wrong, happy holder, but probably not a buyer at this stage. That one for Paul. Let me now do those ones that Nick sent through. And we have Amazon, of course. No session would be complete without our customary look at Amazon. And we have, you can see the price section I wanted to see on Amazon. Have we seen it? No, we haven't. So I think I'm going to go ditto on what I probably said the last few times we looked at Amazon, which is, look, there's some good stuff going on. It's sort of building, hopefully towards a break of this long-term downtrend zone. In fact, since we last spoke, and in fact, on last night's candle, the long-term downtrend zone changed color. It's no longer getting worse. It's probably more benign than anything else. So that's a minor positive, but there's definitely not enough in there that we're not seeing this price action, and we're not seeing, you know, the overwhelmingly white candles I like to see. So I can go hold, but I'm not a buyer of Amazon just yet. It's not doing the MSFTs of the world. Well, it's stalling, but I think that'll keep going. I'm happy to hold this one as well. Might as well do a couple of these other ones that we have added some risk to. Yeah, look, you can see a little bit of the influence here, I guess, of this supply zone coming in, but I think holding up extremely well given the broader market. And what was the other one that Meta is fine also, that we've turnaround plays, big blue chips that we've been watching and comparing, you know, back to Amazon and saying that Amazon's not quite there yet. In fact, we looked at Tesla and said that not quite there yet. I'll go to that in a second, but let me just say happy holder there on Meta platforms. No reasons to manage or exit on that just yet. And just showing you that Amazon is you know, getting there, but not quite there yet. And then Tesla actually failed. And this again, do I really need to show you the shark again? But this is why for these turnaround plays, we're just that little bit more cautious, aren't we? Adding that 1/3 is definitely the way to go. Dip the toe in, because we can sit here on Tesla. There's a reason why they haven't turned around yet. Okay, let us keep moving. And I'm going to go to NKE, this one for Nicola. That's not it. Don't worry, Nicola. It looks better than that. Here we go. This one's done a lot of good work, hasn't it? And I think did we say plus 1/3? There's maybe a little cheeky 1/3 here. I'm not sure. The candle doesn't really warrant it. Maybe it was on this candle here. And look what happened next. But I think it's fine. Not a buy just yet, but not far off it. Isn't it? Through there. Let's see the price action swing back around. Get some nice white candles. We'll probably get a little reaction there from that point of supply next time we get there. I know I'm really projecting into the future here, but keep an eye on the price action, and keep an eye in particular on the price action in the light green zone. And maybe even if you get the right candles in here, might be okay to add some more risk on it. I don't think we need to get out just yet. It's looking just fine. How do you like those words? Just fine. Do you want your stocks to look just fine, or do you want them to look amazing? It looks just fine if you're in a happy holder there. And then back to here now. You have no idea how many applications I've got. I need to manage to keep these presentations going. NFLX. This is interesting. We've done our scratchings on this in the past, haven't we? It helps me here to point out our demand and supply candles. And again, go ask ChatGPT. Hey, ChatGPT, what are the 2 most important candlestick patterns out of all candlestick patterns? What are the 2 to rule them all, ChatGPT? And it doesn't know. And don't tell it. Please don't tell it, because that's the only thing I have over ChatGPT still, is that I know what the 2 most important Japanese candlestick patterns are. And it's really the candle that looks like candle 1, and the opposite of candle 1 is over here. Let's call that candle 3 over here. And then let's make it a color we can actually see. So let's go candle 3, and then we'll call this one over here, candle 4. So candle 1 and candle 3 are effectively the same candle. Obviously, they're just upside down, but this is your transition between excess supply and excess demand for candle 1 and between excess demand and supply on candle 3. And this is a transition candle, and then you've got your continuation candle, because really the market is doing one of two things, isn't it? It's either transitioning or it's continuing what it was doing. And candle 2, all demand really, isn't it? Excess demand, and candle 4, all excess supply. So they are the two most important Japanese candlestick patterns. You don't need to buy a book on Japanese candlesticks. If I was to write one, it would be 2 pages long. Wouldn't sell many copies, I expect. Do I need to do anything more with Netflix? No, I don't. I wonder what we said on this in the past. Maybe I said, look, it's got some good price action going, but I'm worried about the point of supply up here. And therefore, on a reward to risk basis, I can't make it work. I don't know. I can't remember what I said. But what I can say, since then, it's fallen back into lower peaks, lower troughs. And therefore, if I had it, I'm starting to feel really nervous about this one. I don't want to see it get below this peak here. That high is 316, you would take. Below that, it's starting to look like a really slippery slope. I mean, the final point of exit is, beneath 285. Can I go a hold? I just don't see why you would hold it. I just don't see, given some of the other stocks we've seen, and they're all trading on the same economic fundamentals. We can all see. I mean, it's not like the people in Netflix haven't heard of all the great stuff that's going on in the world that AAON has heard. You know what I mean? Like, we all know, and yet the way people look at Netflix, whether they're deciding to buy it or sell it, is very different from some of the other ones we've seen. I don't think you need to own it. Dare I go sell on that? I'm going to refrain from going sell just to cover my backside for next time if it goes up. GE, that's not the right GE. Don't panic. That's GEVO, which looks rubbish, by the way. That is a straight out sell. And I need to find the proper GE, which is down here. And that looks amazing. Happy holder here. Can I buy it? Look, not at 100. I reckon there's a bunch of GE shareholders, and this was 30, 35 bucks not that long ago, or 45 through here, who are doubling their money. I mean, if you are a value investor, giving yourself a big pat on the back right now, I reckon you're thinking that 100 bucks is double your money. Look, I'm just going to go minus 1/3. I said for one before, I don't think 100 is a surprise. And there are some signs here that 100 shouldn't be a real surprise here as well. And maybe I'm being inconsistent with some of the things I've said before, but maybe it's just my experience with GE over many, many years of having traded it a few times. But I'm just going to go, what did I type GE there? I meant to minus 1/3, just on the round number. But that doesn't mean that I'm not still happy to hold plus 2/3, which I'm more than happy to do. And we may even have an opportunity down the track to add back that 1/3. So happy holder of the 2/3 and just managing a little bit of exit there on the basis of the round number. You might say, hey, Carl, it's just 100, who cares? Come back in 3 months and we'll see just how important that 100 bucks was. And I've got coin here. I'm still getting to Snap, don't worry. I'll get everybody's done before the end of the day. I don't need to spend much time on this one because it's not a buy. In fact, it's probably a sell. It is losing the battle with that long-term trend ribbon, which is indeed providing the most robust dynamic supply, isn't it? There's very little to like there, candles, price action, and I'm as far away from a buy on that as you could possibly get. SNA, which is not that one. Again, don't panic. I reckon that's the one we want there, Snap on. Which looks just as bad, unfortunately, as Coin. I'm not sure why the two would look the same. They're very, very different companies. But that looks awful. And again, I like to think in my mind of percentages, and I would say 0% is a buy here. In my mind, hold, it might be as much as 5% holds if I just squeak in, because that low there is important, 968. Beneath that, I think it's in a great deal of trouble, and that leaves me at about 95% sell. And I totally concede that tomorrow Snap-on may be taken over at $30 a share. It is absolutely possible that occurs, okay? Because anything's possible, ladies and gentlemen. Anything's possible. But is it probable? Okay, so my decisions are made on this sort of thinking, not on this sort of thinking. But I concede tomorrow I may be made to look very silly by the market. But I don't know the future. Wrong chart for Snap-on. That Snap, well, I tell you what, Snap's not great. It's this Snap on SNA. Oh, it's just down there. Okay, good news is we did Snap. It looks bloody awful. Snap on, however, looks pretty darn good. Would I buy it? This is a big white candle. I'm going to say not yet, and it's only a not yet. Okay, I will buy it at some stage because I like everything else that's going on. Especially when I zoom out to the weekly chart, I can see that. So I meant to do that on purpose, ladies and gentlemen. It was in the script. I can show you the script. It's over here, where I meant to show you SNA, Snap, and then show you Snap on, just to juxtapose a good chart from a bad chart. It was, the only reason why I'm not going plus 1/3 on that straight up is the upper shadow. I think it needs to do a little bit of time. It also needs to deal with some of this supply here, and then we can buy it at some stage in the not too distant future. Continue to ask for it and remind me that the code is SNA, not SNAP. Nick is on the ball as always. Now, streamers, DH Horton, it's not DHR if I'm not mistaken. I might be mistaken. Just give me the ticker code on that one. I don't know them all off the top of my head. Adonis has chipped in with DFIN, which looks very good. I'm no complaints. Geez, this is bad. I was about to say no complaints plus 1/3, but that's nasty. That is a species-ending event. Okay, this candle's good enough. I'm going to go plus 1/3 here, Adonis, no complaints, and just understand that there is going to be some supply up here, and that's why it's only plus 1/3. But I think this is very good, and I think this is very good. And again, assuming that we've done the full sweep of the entire US market, we haven't. And this was up the top there, top 10, and I'm going to buy 10 stocks today. That would be fine to add a third. ESE, which is not that one. You can just see the way Amy Broker finds these alphabetically for me, and then I have to try and find the right one. This is good. Could I add a third? Oh, look, I don't mind. Again, within that context of I've done a huge sweep. There's nothing else better, Carl. And this is, this is in the top few I found today. I can happily go a third. Because this point of supply is there. I can see it. I know it's there. It's 100, by the way, 100. But we've dealt with 100, and I don't think it's going to be a problem next time round. Let me click on the W, and the next level's up here. Oh, look, I'm okay with it. I could go plus 1/3. If you love it, if you love the fundamental story. Now, I'm still waiting for DHI. Thanks there, DHI. I will find it. DHI, which is not that one, is that one. Oh. Well, it's actually a nice little segue, isn't it, from the last one, which was ESE, and I'm saying that I could, yes, there's a point of supply there, but everything else checks out, so I'm happy to go plus 1/3. And then we have a look at a chart like DHI, which is that one, and you can see why, like ditto here. There you go, and the 100 as well. What an amazing coincidence between the two. I think that's sort of your drama with 100, and now we're through it, and then because we're through it, in either of these, like they're both plus 1/3 candles, and that's why ESE, I was happy to go plus 1/3, so that's plus 1/3, and then plus 1/3 here. They're fine. Now, unfortunately, we're not there, are we? We're down here, so that's navel gazing. Forget that for a sec. What do we do now? Well, I can't buy it now because of the upper shadow. The upper shadow telling me that yes, we heard some great news, but there is supply in and around that 108 to 110 level. So it's a matter of waiting and watching. Now, if you have it, I guess that's the other way to look at this. What should you do with it? Is this enough to warrant taking some profit? Let's say you did get in here at 99.30. Do you take some profit at 108? Let's say you added a third here, you added a third here, and now what do? Do you take profit on a third? It's not a great candle. Is it enough? Is that one candle enough for me to take profits? I'm going to say no. But if I saw a follow-up tonight, then I might be more inclined to just knock only a third off the table. But I'm going to say no, just on the basis of the gap, because if I blend these two candles together, it's still a pretty darn good candle. So I'm going to go happy hold on that one. Okay. Now what I will do, I won't take any more because we don't have time. In fact, I might have to end it there. So Perry, you've given me some there. Michael's got one, and Nicola. Look, ask me again next week. I do have to end this one here because I'm going to be on AusBiz. I'm not kidding, in 5 minutes. And you can literally tune in and you'll see me in 5 minutes. So just a reminder that we do these on Tuesdays if you're interested in Aussie shares. We do these on Thursdays if you're interested in the macro, the indices, commodities, forex and crypto. I have so much fun in these. I hope you do too. And I hope you know somebody who would love to get involved. Tell them to go to thinkmarkets.com/au/webinars for all of the grand cost of nothing. How about that? I think this is the best bit of free stuff on the internet, if I say so myself. But it's also free to open up an account with ThinkMarkets. How about that? We're asking for a grand total of nothing. Of course, when you do a trade, it's only $8 flat rate for your Aussie shares, and it is HIN and CHESS sponsored. There might be cheaper rates out there, but they won't be HIN or CHESS sponsored. And they won't have the fantastic ability to trade your US shares via CFDs commission-free with us as well in your same account. And then we are an award-winning broker. We've got offices all over the world. We're regulated in, 6, 7 jurisdictions. Go to our website and find out the best platforms and the best customer service. And you get me, of course, as well. Head to www.thinkmarkets.com/au for details. If you're watching on any of the streaming services, make sure you subscribe to stay notified of my future video updates. And please, it's very important, you hit the like button to let, my overseers know that I'm doing a great job for you as well. All the best for your trading until we catch up again. Bye-bye for now. But before you run away, don't forget that everything we've discussed today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before making any decisions, please consult the help of a financial professional or consider those possibilities very carefully. You can learn more about ThinkMarkets and our products by downloading our PDS, product disclosure statement, from our website.